Good morning, it's Harvey Jackson. Just going to get through a few different items here. First, just the war that's going on and how that might be impacting the market here a little bit. And weather is top of mind for just about every scenario here as well, and what it might be doing. So just quickly get through this here. So war tariffs tear the market central bank roadmap, and the central bank was just out over the week, and they're basically putting a pause on it for the summer and waiting for some of the tariff news to kind of build over the summer and see what it does with the economy. That whole situation is putting a lot of the traders kind of sitting back along with that to see how this is all going to play out. But you can see in this article they're talking about uh, the Middle East here as well, and how that's impacting the market as well. They're expecting the U.S. dollar to increase, and it's been on fairly decent drop, which actually puts a lot of the U.S. traded commodities that they want to sell in favor to the rest of the world. Like the soybeans and corn are actually relatively good value to sell to the rest of the world with the decreasing U.S. dollar. And the two commodities that I will maybe keep focus on myself is wheat and crude oil, as those two commodities have the biggest impact for the farmers that I work with. Uh, Japan's having issues there too, but their inflation is increasing, and they may have to keep some rate hikes alive here. Trump's economic golden age meets Fed's brass tacks. Now, and this is kind of just reiterating a little bit of what I'm talking about here. You can see the flattening before the decrease here. When you look at the other years, it's pretty constant going down. But just some of these policies are just creating enough issues for traders to trade these things. Let's just have a quick look at the weather. Now, I'm going to show you this, different weather models, but the 8 to 14 day in the ensemble of the European model is showing more dryness. You can see the dryness and then more wetness in here. So that's what this model is kind of showing here. But then you look at the current radar map and what it's been doing, and you can see that it's got some moisture in it now. Is it going to be enough to break any drought? Yeah, it's hard to say. Uh, and I'll point out these delayed maps. This is a soil moisture drought map, and we're not the 16th, but if these rains actually put some moisture in here to replenish any of this, there might be more just-in-time kind of scenarios than we would like as farms are trying to get a crop out there. The crops look okay. So you can see in this Saskatchewan map where we've been getting a lot of moisture in, especially in this bottom corner. It basically was without, so all of the other areas were getting some moisture. So if you look at cumulatively, you can see that's where the moisture has been, and then without in the other areas. Top moisture, it seems to be better east versus west in this map here as well, and it kind of shows this even in the crop conditions as well. It's very spotty. This is not even as accurate as the localities when you get down into this mile versus that mile got rain even on within some of the same farms. One quarter got it, the other one didn't, and definitely looking like these thunder showers and whatever else is going across. It's going to hit some areas and not others. Here's just the 8 to 14 days. So there's still some models showing a little bit of scattered showers in the prairies. And again, the U.S. Corn Belt definitely looks like it's getting what it needs, but there's a west versus east in there as well, same as in Saskatchewan. So this is going all the way up to the July 4th. Looks like there's a band that could be going across there again. When you extend it out that far, it's only a guess. Canola is up 6 to 7. European rapeseed is on fire as well, and I'll show that in here. They're up $8. Crude oil up slightly as well. Soybeans up slightly, and the wheats are just down 3 to 5 cents. So, and I'm going to quit showing the July contract. here probably this week and not start showing it unless there's something squeeze going on or something like that. But I'll try not to be showing that because it's not significant as for the farmer pricing anymore. So here's your November contract, and we are trying to approach that 161.8 retracement value. We went through this, and then now we're on that weather premium policy change scenario. Still trying to figure that out. And here's your January contract. If some guys have put their timelines a little bit further out, we're still looking at that is a contract to use. So here I just squished this in a little bit here. This is the European rapeseed, and it's matching its highs that made last February. So we've climbed out of this wedge, and now we're on the increase, and I guess the upside target would be somewhere in there as well. Here's your soybean oil contract. It's green today, and your soybeans trying to at least get into this, trying to make a new high in this area. Now, would we at all get closer to that? It's hard to say. Light crude oil pulled back from the war premium a bit here. Still got a lot of premium in there from where it was in the 50s. I don't see this happening as Iran-Israel still continues to have more and more conflict, and even in the Black Sea, Ukraine and Russia are going at it pretty hard there as well. The Canadian dollar's pulled back a little bit, so it may give us a chance here to get a little bit more basis contracts for wheat and soybeans to get locked in. If we can get a little bit of a pullback, I'd be looking at this area here if we can pull back to there. Let's have a quick look at wheat. Not showing the November contract, but you can see how we've got to our highs that we made back in February, and we're still looking for that $6.90 to $7 upside futures only target. So we're sitting at 660, let's say. Here's your Kansas, still shy of the 200-day moving average on the Kansas, but when you get to the Chicago, we're trading right at it. So if you can get above that 200-day moving average, you can see that it doesn't happen very often. You don't stay up above it very often or very long unless there's a whole shift. And I think wheat is one of those commodities that the world needs, just like crude oil. Here's your milling wheat, and it's had a pretty good run along with all of this other stuff here too. Corn futures trying to get through this just kind of a wedge that we have going on here. If we can get above there, we'll probably be looking at higher levels in there. And that's all I have for you today.